Or 25:30.
Perfect. Ustream will put this onto YouTube like sometime in the middle of the night.
Sweet.
I know, so you'll have a link so you can actually, now, that's new too.
Right on. I like it.
1 minute.
The full episode.
Excellent.
Okay, so.
Content distribution synergy.
There you go.
I like it. Do you want me to hide while you're doing your...
Nah, it's fine.
Are you sure?
Yeah.
You can adjust the camera.
I forget, is it this
a little
one?
bit to the left, yeah.
There we go, see? We're all good.
Okay, just about 30 seconds. Screen's black. Good.
So I'm going to talk about that 415 number in the intro.
Okay, so you're gonna. Okay, I'll bring that up right away.
Like, yeah.
And homeloan_ninja.
Mm-hmm.
Okay.
This is so nice. I don't have to be on Twitter tonight.
I know, I'm kind of worried about
Okay.
multitasking.
Yeah, good luck with that.
10. Or no, wait. Sorry. Cut. Okay, now it's 5.
Hello, everybody. Welcome to another episode of Kevin Live. Thank you so much for inviting me into your guys' homes. And I have heard, too, now that it's not just your guys' homes, because I know so many of you are, the majority of you are watching my program, of course, at home, whether it's on the lovely Comcast or Frontier Cable in the Portland metro area, or you guys are tuned in on your computers watching me on Ustream. But I also know, too, that some of you are on the go and you guys are watching me. I've heard from city buses. I've heard from a park on your Droids, on your iPhones, and yes, even your iPads now have an app and they all feature my show. So thank you guys, no matter where you are, for tuning in. I totally appreciate it. As always, I'm always excited about the upcoming show, but I'm kind of excited about this one for multiple reasons, and we're going to get into that in just a moment. But I'm always trying to enhance the production. You know, the show is called Kevin Live. I really do this program live. So if you're watching it right now on Thursday, May 5th at 9-ish, depending which time zone you're in, yeah, it's absolutely positively live. So during the course of this program, you will be able to tweet in a question. Those of you who watch my show regularly know you can tweet in a question. We'll do the best that we can to answer that. However, there's been a change. If you look on the bottom of your screen, there's going to be a different address that you're going to be tweeting to. We're going to have you tweet directly to my guest tonight. So I'm actually kind of like, in celebration of Cinco de Mayo, kind of taking it easy tonight. I'm not going to be so active on the Twitter. So I will, obviously, if you tweet to me, I'll do what I can to get it going. But that right there is the Twitter address for tonight's show. Now, one other thing that I've got that's got me all excited is that, again, too, I'm wanting to elevate our production. I want to bring it up to another level. And so there is a new feature that I'm introducing on tonight's show. It's, in a sense, too late now for you guys to participate in this, but there's a new Kevin Live hotline number that you can call in. We're going to bring it up on your screen right now. This is a number that I am asking all of you. You want to not just write it down and lose it on that piece of paper. You know, I want you to program it in your phones. Program it right now. That's like the Kevin hotline. You call that number, you press option number 2, and you can leave a voicemail for yours truly, and it will get listened to. It will get to me in one way or another. So if you want to ask a question, if you have a comment, who knows what it is. If you want to tell me about, you know, a fundraiser, if your nonprofit organization's got something going on, if you're a band and you're having a performance or a show and you want to, you know, tell people about it, leave a message on there. You never know. And yes, I will be screening those. We'll go through them, and yes, we'll play them on future episodes of Kevin Live. As a matter of fact, we're going to debut some, because some of you pioneers out there, you saw the tweet, they called in, they got questions for tonight's show, and since they did it early enough, it'll be on for tonight's show. So we didn't get a chance to we're not going to have a chance to do all of them, but we are. So that's the new thing we're going to try out for this program. That's the number right there. We'll show it periodically throughout tonight's show, but that is the magic number. Speaking of magic, it doesn't get any more magical than when you have a ninja. Yes, a ninja, ladies and gentlemen, on the show. Now, this is not your typical, well, he does have a sword, but Not your typical karate type ninja. No, we're talking about the one, the only home loan ninja himself, Mr. Jason Hillard. Welcome to the show.
How are you doing?
I'm doing good.
Excellent.
Welcome back.
Thank you.
You got a return invite.
Yes, I'm happy to come back. I missed being here.
It's a different experience, isn't it?
Absolutely, different audience. It's good to get out and meet new people.
So, speaking of the people, tell us a little about who are you? What do you do?
Well, I've been working in the mortgage business in Oregon and Washington for the last 5 years. Kind of had a front seat view of the train wreck, as it were.
Right.
And I used to when I started, I was an originator, but back then, getting business meant picking up the phone book and dialing for dollars, and that's not really. I don't like getting calls at dinner, and I don't imagine anyone else does either. So
right.
I got out of that and got into the processing, and in the midst of it, I'm reading underwriting guidelines left and right, and I was like, I should be sharing this with the world because nobody really knows it. The mainstream media doesn't educate anyone, so that's basically what the site's about.
And so would it be safe to say that tonight you might be, in a sense, like almost like a myth buster?
Yes, yes.
So we're going to be taking, so for those of you on Twitter, if you've got questions, if you've got concerns, if you've heard rumors, tweet them in, because now is the opportunity, because the object of tonight's show is to entertain you, as always with every episode, but it is to educate and to hopefully assist you in making not some bad choices.
Mm-hmm. Hope so.
In the future and everything else. So that is our goal for tonight. So, like I said, and to make it even more exciting for us, it would be their tweets.
Exactly.
Because
and
that's how it works.
Absolutely. Love Twitter, so that's the address. Hit me up. Any questions you have, home loan or fabulous hair related.
There you go. There you go. Speaking of which, I noticed you got all ready for tonight's show.
That's right.
You're a good man.
You're a good man. Nails.
You're a good man. So let's kind of start going into it. You basically have gained some notoriety because you do have is it like just a website or is it a blog?
It's a blog. Yeah, and it's gone through a lot of iterations. I haven't been blogging as much lately because I've spent the last month redesigning it because of some internal changes we're experiencing at Home Loan Ninjas Corp.
Okay.
Yeah, so we're tweaking some things around, but we'll get to that later. So, but yeah, it's a blog, and it's there to put out some information that's not complete BS.
Okay, so for those of you out there who want to find the blog, how would they find your blog?
You would go to homeloanninjas.com. That's homeloanninjas.com.
There you go.
Yeah.
Amazing.
I've been in radio.
All right, so that's going to be the information. And as you guys know, there is a newsletter for Kevin Live. So I think on Saturday or Sunday you get after the show, and I kind of put in there some notes, some reflections, any type of email addresses or stuff or websites that come up. It's all in there for you. So you go to my website, KevinAguilar.com, as you guys know, and you can sign up for that there under the Kevin Live. So I'll email it to you personally.
Yes, and if you go to our website, one of the changes we've made is now you can sign up for a newsletter. And who knows what's going to be in there, but it's guaranteed to be exciting.
There you go. So see, I will, you know what? I think I just may do that.
All right, right.
I'm going to do that, so join me in doing that. So, all right, so mortgages. Do you want to? Should we start with first-time home buyers, or?
Sure. I kind of put some notes together here on my computer screen, and basically, the last time we talked, you wanted to kind of like segment out the home loan process for someone who's going to go buy a home.
Yes, because there's a lot of people out there, a lot of first-time home buyers. There's a lot of first-time home buyers out there who are thinking, after everything they've seen, everything they've heard about this crash and that crash, and Fannie this and Freddie that it's not even an option. Would you say that's true?
No, but there's, as you were talking about Mythbusters, first-time home buyers, that just means you haven't owned a piece of property in 3 years. That's what a first-time home buyer is.
Okay. Is there a special magical first-time home buyer loan out there?
There's a lot of places that advertise those.
We're not mentioning names.
No.
I'm just saying.
But in my experience, those are the standard programs that anyone could get. But some of them happen to be really good for first-time home buyers.
Correct.
Minimum down payment, no down payment. But you don't need to be a first-time home buyer to get any of those, as far as I know.
But there's not a magic solution.
No, the magic solution is what I'm about to give you. It's the secret awesome sauce.
So here we go, you guys. He is going to be what? Okay, so the secret magic. What is it?
It's involves being smart and working hard. So that's your secret sauce. Basically, what I'd like to see everybody do that wants to apply for a loan, especially those that are going out to buy a house, I want you to 6 months before you decide you want to. You plan out, hopefully, that in 6 months I want to buy a house. At that point, you stick your last 2 years taxes and W-2s and any information, if you're self-employed, your business tax returns, you put all that stuff in a file. And every month you put your most recent 30 days pay stubs in there. And you keep that information fresh. So you have it all together so that when you go talk to a licensed mortgage professional, you've got it all, because they need to see it. And anyone that tells you that they can like pre-approve you without seeing all that stuff is smoking something. So
Especially nowadays. Because
absolutely.
So would you say that it might be almost safe to say that the no doc, the no paper mortgage app is maybe kind of extinct with the dinosaurs?
It's gone. It's totally gone. And even there's still people out there that say it takes 5 minutes to get approved. Unless they type astronomically fast, that is not the case. In my ideal world, when you get pre-approved, that means your loan officer has looked at all that income stuff that I talked about. They've looked at your credit with a fine-tooth comb. They've run you through the automated underwriting system for Fannie or Freddie or USDA or whatever. And so if they know what they're doing, when they hand that to an underwriter, they already know what the underwriter needs to see. We call that a one-touch file. The underwriter grabs it, they look at it, and they're like, yep, that's all there. Done.
So there you go. So 6 months out minimum, you start the
That's
file.
right. That's
start
right.
The file. Okay.
And 6 months in advance, that's when you talk to a loan officer.
So you're talking to the loan people. You're not trying to find a realtor.
That's right. Talk to the loan people first. I know realtors out there. I know one in particular is like, no. But
well, they'll tweet in if he's
Yes.
wrong. Tweet him. Tweet us in right now.
I
Maybe
love when people tell me that I'm wrong. It's fantastic.
Yeah. And if he's like, who knows? Maybe I might just pick up the phone and give you a call, and you can.
We actually have a question right here.
Excellent.
Okay.
Now, this is kind of nice because, like I said, today's Cinco de Mayo, so I'm kind of taking a break tonight. So
Fiesta.
I'm taking a little exactly. So since you've got the tweets, I forgot. Whenever you feel like jumping into one, go for it.
All right. Well, short, fat, white guy on Twitter, my buddy Scott. Pros and cons of a 5-year ARM.
Ooh.
If you don't know, the ARM is the adjustable rate mortgage.
So there you go. So you're not literally losing an arm and a leg.
No, hopefully not.
So don't be afraid. An ARM stands for, one more time?
Adjustable rate mortgage.
There you go.
The media has told you they're evil.
Right, because isn't that the mortgage that you get at 3% and then like 5 years later it goes to 22?
That would if it goes to 22%, the dollar is not worth anything probably.
Okay.
So we're all screwed.
So it's not going to do that.
No.
Okay.
Basically, when you get a 5-year ARM, it's fixed for 5 years at. I'm just making something up. Don't take this as a rate quote because it's not. Let's say it rhymes with.
You can just do AB. Trust me, save yourself some trouble. Say ABC and then XYZ.
Okay. How about this? It's rate A, and then it's fixed for 5 years. And then after that 5 years, some of the numbers that were disclosed to you when you signed were the margin and the index. And there's also caps, but we'll talk about that later. The margin is what's added to the index. The index is something like the cost of funds index or the LIBOR, which is the London Interbank offering rate. And so those are financial sector indexes. And then you add the margin on top of that, and that is what your rate is afterwards. Now, the 5-year ARM, a lot of people are afraid of ARMs right now, and they're not right for everybody.
Right.
But let me tell you that I can count on no fingers the amount of people I know that have kept the same loan for 30 years.
Yeah, and if you're, I mean, just guessing, but I'm just thinking that the first home you get into may not be that ultimate dream home. It's not going to be the MTV crib. It's not going to have. Am I right?
That's right.
So in 5 to 7 years, you might want to kind of get out of
correct.
it.
And according to the National Association of Realtors and a bunch of other people, the average person only stays, in their home for 7.5 years, I think it is. Conversely, people only keep their loans for like 5 to 7 years. So really, the 5-year arm is not evil. If you know you're going to be making more money, you might have to move for a job. The 5-year arm can save you like a ton of money in that 5 years if you're not going to be there for more than 5 years.
So there you go.
And there's people that have 5-year arms right now that have adjusted, whose rates are lower than the fixed rate was, because, and more so a year ago, because the market tanked so bad.
Okay.
So not all bad.
Not all bad.
But not for everyone.
But not for everyone. All right. Next thing. Now, Short Fat. I think I've talked to him on Twitter before. He's a good guy. I think he was feeling ill, or his kids were ill a couple weeks ago. So I hope everyone's.
Oh yeah.
I hope everybody's feeling better in your household.
He is. I was actually at his house the other day.
Good. So
everyone's doing well. Yes.
Okay. Good.
Well, no one was there, but they seemed like they were doing. I was just hanging out in his living room. It's kind of weird.
Okay.
So the number, I sense my ninja sense is tingling. I think we probably have a voicemail that says, should I pay off and close all of my credit cards before applying for a loan?
That is correct. That is, your ninja senses are dead on. The question is, should I pay off all my credit cards and close them? Close them out, just and then, yes, before I apply for my loan, because, you know, just trying to be thorough and just trying to get things done.
Well, the answer to that, and this is, you're going to hear this a lot when you talk about loans, is it depends. And I'm not talking about the adult diapers. It really depends on what you got going on. If you have a very high, what's called a debt to income ratio, then getting rid of some of that is good. That's a good thing. But you want what's called credit depth as well. And if you have 3 credit cards that you've been paying on for 3 years religiously, or 5 years, or however long it is, that's good for your score. So ideally, what you would have, say, maybe 3 credit cards, all of their balances under 33% of the high limit. That is good for your credit. But if you close accounts, and then what if you didn't buy the house? What if you didn't find something, and then you go a year and you don't have any credit history for a year? That's not good for your score either.
So there's not really a cookie cutter answer.
No.
What I'm saying is talk to your loan professional.
That is correct.
And find out what would be best for you in your situation.
That's right. Every credit report is its own person.
There you go. They're very well put. Sounds like
Touching.
I was gonna say, it almost sounds like you So, well, since you're jumping into some questions, here's the deal. So I talked about that new Super Kevin hotline number, right? And so basically, for those of you who took part of it earlier, this is kind of how it works. Because we have some voicemails on there that pertain to tonight's show, I'm going to, for example, just throw one out. So, supposedly, I'm told if I click this button, are you ready? It could not work. We'll have to go to a Twitter if it doesn't.
I got more Twitter questions.
Okay.
I have a question for Kevin Live tonight with Home Loans with Ninja. I wanted to ask how your credit score affects your interest rate when buying a home. And if you've got a good rate, but it's not, or a good credit score, but it's not great, is it better to wait and try and improve your credit? I guess I'm just wondering how many points it needs to improve before you get a really good interest rate.
All right, well, that's a good question, and I'm going to start it with that same phrase. It depends.
It depends.
So basically, okay, so credit score can affect it. It depends on the loan program. FHA itself, the guidelines, they still don't really have this tiered credit system that the conventional loans have. When you price out a conventional loan, you've got this matrix, and it goes by loan to value this way, and it goes by credit score this way, and you find where that loan to value is and their credit score, and that's what you add to the cost of the rate. Not to the rate, but to the cost of it. There's some back-end financing mumbo jumbo that I don't want to get into, but
right.
You know, the banks get money from someone for a certain amount, you know, and then they lend it out to make money. So on the back end, there's money, and that money can be more or less depending on the credit score of the borrower. But that's a conventional loan. For FHA and VA, it's not quite the same. You have maybe some minimum cutoffs, like the bank that I work for, you have to have a 640. But we're also allowed to broker out to other banks that have different deals.
Okay, that was actually, I don't have Ninja, but I do have other senses. There was a question. Here's what happened. That new technology happens. Here's the deal. New technology, there was voicemails. on that new Kevin hotline that I spoke of earlier. I deleted them, all but that one. So, but there was a question on there from someone who asked, you know, credit score. What minimum is your credit score before you can't get a loan?
Well, the answer is always be improving your credit score. I mean, that's never a bad way to go.
Okay.
But I would say that most people out there, for the popular loan programs, try to have a 620.
620 minimum.
It's not that hard to get to 620.
Okay.
And if you have a credit report, and this is one of the things I wanted to talk about, don't keep pulling your credit report to see if it's improved, because most of the credit reports you pull aren't actually the same credit reports that we pull to see if you qualify for a mortgage. So it's almost pointless. And also, if you pull it more than a certain amount of times in 90 days, you lose 5 points here and a couple points there. It's not terrible. Some people think if you pull it twice in a year that it go 100 points.
100 points or something.
No, that's not the case. But 620 is a good goal. If you can get it to 680, and we've helped a lot of people do that. I think the last time we were here, we were talking about James had just closed a loan for someone that we had helped them with their credit for 14 months. So it took them a while, but they raised like 120 points. They got a great deal on an awesome house.
So if you have had, you know, particular hardships or what have you, you know, we basically don't throw in the towel. Correct?
No.
You know, you know, you can go to some experts, you can go to some people, they can give you tips, ideas, information, suggestions on what you could do to repair and improve and still make home ownership a possibility for you.
If you had a foreclosure 3 years ago, if your credit's okay now, you can get a home loan now.
Really?
3 years.
Who knew? See?
I know. 3 years doesn't seem that long.
It doesn't.
But no. I got more. Do you want more?
Go for it. Absolutely. We've got
right.
6 minutes.
Let's see. Tim says, if I qualify for a USDA loan, am I honor bound to raise bovines? I think what he's getting at is...
Well, first, what's a bovine?
It's a cow.
A cow?
Yes.
Oh, wait, what's the question one more time?
If I only qualify for a USDA loan.
Oh.
Now, I'll explain the USDA loan because this brings up a really good point. A lot of people think it's also called the Rural Development Loan.
Okay.
And a lot of people think that you need to be in BFE, shall we say?
There you go.
In order to qualify. Watching my language. So they think that you need to be way out in the middle of nowhere, and that's not the case. The USDA loan is meant for rural areas, but the way they define the rural area is it's like a 20-year-old census, and if the town had less than 25,000 people 20 years ago, it's rural now. So there's lots of places around North Vancouver, all over Clackamas County, that actually are not that unpopulated. We actually did a video where we shot me, and behind me was an empty field, but then you turn across the street and there's like a strip mall or a neighborhood, or so it's not that bad.
It's not that bad.
Right. So no, you don't have to raise bovines, and the USDA loan is really good because it's targeted towards not just rural areas, but low to moderate income folks as well. So really good deal. And then Barbara PDX Aircraft had a follow-up on the adjustable rate mortgage. Too risky versus traditional mortgage. True. Really, it depends on what you want to do. If you're going to be there for more than 5 years, yeah, get the 30-year fixed. The rates are incredible right now. There's no reason to not do it. But if you don't see yourself living there for very long, why would you pay thousands in interest more than you otherwise need to? So keep that in mind.
There you go. See, more incredible, interesting stuff.
Mm-hmm.
See, that's why I love Twitter. And again, too, if you've got a question, you know, I don't know if or how it could happen, but you never know. Don't hesitate to go ahead and call that number now. Or if you have something else, you have a comment about tonight's show or anything else, leave it on that hotline. You call that number, you hit option number 2, and it will allow for you to leave a voicemail, and that voicemail will get heard. It will get heard.
Right.
So, you know, you're 6 months out, you know, and then what happened, you know, what point would you say then after being, oh, really? 2 minutes.
Oh my Lord. Let's do an hour.
You know, that's a possibility. Hey, everybody, just breaking news really quick. On the 4th Thursday of the month, I'm going to be coming to you for 1 hour. Live.
Awesome.
Live. So we got some good questions out there.
Mm-hmm.
I'm afraid to jump into anything else big topic, because would you believe half an hour has flown by?
No, not at all. That was insane.
It is insane.
I didn't even finish one water bottle. I mean vodka. I mean water.
Yeah. It should be margaritas tonight.
Amen to that.
But we would never do that on of course, on TV.
That would
so.
be wrong.
That would be wrong. That is what the paperwork says. So, so there you go. So and again, this is such a huge complex. We could do an entire series of these shows and still just hit the surface. So bottom line, again, too, is go to his website, look at his blog, homeninjas.com.
HomeLoanNinjas.com.
That's where you want to go. You can subscribe to his blog. There's going to be a ton more useful information there. And then there you go. But the idea of the show is just to help, get some information out there, maybe dispel a myth or two, and just kind of let you know that if you're in the situation where you feel that home ownership may not be, in the cards for you, you might want to think twice.
Amen.
And it may not be in the cards for you this year.
No.
You may be on the 2-year program.
Mm-hmm.
But it can your dream of home ownership can still come true. So don't stop believing and working towards that.
Nice journey reference.
Yeah, exactly. That's
Nice.
going to be funny. Don't. All right, you guys. So, wow. I can't believe how fast the time flew.
It was fun.
It was. You're always a fantastic guest. I can't wait to. We'll have you again soon. Until then, it looks like we've got about 10 seconds left. So, do you have any closing last words from 3 seconds or less?
Just if you have any questions, you can always tweet me at homeloan_ninja.
There you go. There it is. Thank you, everybody, for tuning in. Have a safe night tonight. Thank you.
Sayonara.
Bye-bye. You rocked it, my man.
I can't
Excellent
believe
show.
that was like the whole show.
Yeah.
Good grief.
It's just, yeah.
I feel like we just started.
We did. I mean, we really could have talked for 4 hours, I think.